Podcast. Ryan Payne back with us. Shipping analyst and investors and Breakwave Advisors managing partner John Kartsonas is here as well, and still with us, Adam Johnson, all morning. Great to see you. Thank you so much for joining the conversation, John.
Of course.
I want to get your take on the impact of this horrific story out of Baltimore and the crash into the bridge. Your thoughts on what we are going to see as a result from an economic angle?
So whenever you have any disruption in shipping, in the shipping world, what happens is usually freight rates move higher. And that's because ships have to wait longer, they have to be rerouted, they have to find alternative routes to deliver the goods. So I think the number one thing you're going to see here, especially on the consumer goods shipping, things that we use every day, cars, car parts, is that you're going to see probably a marginal increase on the delivered price of these goods.
So auto parts, new cars will likely see higher prices for the consumer?
Yes, because basically when you had to deliver these things in Baltimore, now you have to find an alternative port to deliver them. And then probably you have to put them in a truck or a train to deliver to the final destination. That's additional cost. So eventually that's going to be passed to the consumer over time. Now, how much of this is going to happen depends how long this port is going to be shut down. If it's like weeks, months, or multiple months, and also like what the alternative capacity in the ports are. Can you move it to New York, New Jersey, or can you move it down to Charleston, Savannah, or where it's going to be? But ultimately, again, you're increasing costs and delivery times.
What about commodities? In 2023, the port was the second busiest for coal exports, so the U.S. sending out coal.
Absolutely. I mean, Baltimore probably accounts 25 to 30% of coal exports out of the U.S., and this is stopped now, right? You cannot do that. So either you have to, the existing coal, you have to rail it somewhere else, like maybe down to Norfolk, right? And then, export from there, or maybe the U.S. Gulf. Again, more cost, higher prices, and also delays.
Also, liquefied natural gas, waste paper, scrap, things like that in terms of commodities, expecting there to see price increases as well?
I mean, marginal is not really so big of a port for this type of commodities. Aluminum is another market. There are warehouses there. But again, I think the two main components that will be affected is, as we said, auto parts and cars and coal. I'm
wondering if this is going to mean inflation at elevated levels for longer than people expected. Take a look at futures this morning. Shipping and logistic companies, after the collapse of the Francis Scott Key Bridge yesterday, shut the port of Baltimore until further notice, threatening to disrupt $80 billion in cargo shipments, risking more than 140,000 jobs. Danish shipping giant Maersk confirmed it chartered that ship that collided with the bridge and says it is omitting the port for the foreseeable future. Maersk ended up closing lower yesterday, but well off of the lows of the morning, John.
So this comes on top of basically what's happening in the Red Sea, right? You have a major disruption in the shipping world today. Red Sea, people, the ships cannot cross the Suez Canal. They're avoiding that, they go around the Horn of Africa. Then you have Panama, where the water levels are very low and ships cannot transit the Panama Canal. Yeah. So you have a lot of disruptions in the shipping world, and that comes on top of that. So I think it's like the incremental disruption that comes here by itself, maybe it's not major, but when it comes on top of other disruptions globally, that's not good.
Yeah, we've been pointing out the Red Sea hostilities, forcing some of those ships to go around the African Horn. That obviously pressured oil prices up. And we're talking about oil at about $80 a barrel still. Ryan, you got to put this into your analysis of the macro story, don't you? Given the fact that now we're going to have another shipping issue that could keep inflation elevated.
Well, it surprised me that Fed chair last week, Jerome Powell, was saying that we're going to cut rates still 3 times. That's the dot plot says.
I was surprised, too.
That kind of blows my mind because I've been talking about how frothy conditions already are. And you're already starting to see that with, some semiconductor stocks. NVIDIA, Adam, they're so high right now, and they trade at such, at a high premium to where they normally trade at. You've got, net worths are at the highest level they've ever been in U.S. history. You've got housing prices up over the last 12 months. You've got gold up. You've got Bitcoin up. Yeah. That says to me, if the Fed starts cutting too early, that's going to add a lot of fuel to this fire. And what I'm worried about is we're forming a huge bubble. It's going to look a lot like 99-2000.
Just at a time that we're finally seeing some activity in the capital markets in terms of IPOs here and there, in terms of M&A. Johnson & Johnson in talks to acquire Shockwave Medical. Shockwave has a market value of nearly $12 billion, Ryan. UPS CEO Carol Tome says that UPS is actively looking at M&A opportunities in healthcare. They've made a couple of acquisitions for Boomi and MNX Global Logistics. But the CEO of UPS says that both of those acquisitions will, quote, enhance our capabilities, particularly in cold chain. Isn't this interesting that you're seeing UPS go for healthcare?
Well, it's nice to see them diversify because they obviously need to cut costs and need to find other ways to grow their revenue. They've had a rough run over the course of the last year. But this also speaks to the fact that we've had about $408 billion in deals this year versus, it's 50% higher than last year in M&A activity, which says, okay, we all know the Fed now. They've paused on monetary policy. They may cut this year. That's a really good sign for M&A activity for the rest of the year. That's good for banks. That's good for, in general, just the capital markets. And then again, if the Fed starts cutting, it's going to get really wild really quickly.
Well, it was a perfect time for Trump's IPO to hit the market, wasn't it? Former President Trump's newly merged social media company, Truth Social, trades under the symbol DJT. It soared on the first day of trading. Shares this morning are up again. It is now up another 11% at $64.50, Adam. The stock, the most expensive U.S. stock to bet against, after surging better than 50% yesterday, minutes after the trading began. Now, the stock was briefly halted yesterday because of all of the volatility and too much interest in the stock. Your reaction?
Well, you mentioned it's the most expensive stock in the world to bet against. I've never seen this before, Maria. If you want to borrow shares so that you can short them, meaning you're betting against it, the interest rate that you are charged is 150%. Wow. In other words, it has to go down to zero and then down even more, another 50%. You can't have a stock go negative, right? That's how expensive it's become. There are so few shares out there. So you say, oh, gosh, well, do you want to buy it? Well, actually, no, I don't. There are virtually no revenues. There are no earnings on this company. It's trading at more than twice the value of Facebook in terms of, the price per user. But again, there's no money there. They're not making any money.
I wonder how much of the investor base are investors thinking, okay, this is a media company, social media company that I want to be involved with because I'm looking at the growth story, or if they're saying they're betting on Donald Trump returning to the White House.
There's probably some of that. And then, of course, there's this curious notion that, well, suddenly Mr. Trump just made $5 billion. So he can easily afford the $450 million. Well, it's not that easy. Number one, you can't sell for 6 months after an IPO. And number two, if he sold that much, people would say, I'm out of here. Guess where the stock's going.
He owns 60%
so it's not quite that easy
of this company. All right. Great word on Wall Street. Ryan Payne, thank you so much.
Thanks, Maria.
John Kartsonas, thank you so much. Great information from you. We so appreciate it.